into the structure of US oil, Shavyfxhub. Now I choose the monthly perspective in order to get a very clear direction to where oil is headed. But we must all acknowledge in 2008, oil rose to 146. That's the highest oil has been. And let's take note of that. And we don't know what brought 2008, sorry, and that could be the World Trade Center time or something. I don't know. But from what we see here, that oil might be looking towards that direction again, most likely, most likely. Because if you look at the beautiful structure we had here, you see the way oil was defended from that structure. Look at the way oil was defended from that structure over there. You can see the way oil was defended there. That was a beautiful defense on a monthly time frame. A monthly time frame. Oil was defended at that level. So what I'm more concerned about now is to give you a clearer picture in the oil rally, oil buy rally. I'm more concerned about the current rally. So on the current rally, I want to know where will the geo tension stop? Where will it take oil to? Where is it going to lead oil from here, moving from here? So oil has crossed and bridged a critical structure, and bridging a critical structure on a monthly time frame, and as well formed a W structure, double bottom. I expect a retest of the double bottom by break of the neckline of the double bottom. Then you look for an opportunity to go long. It's going to be a very long day. It's going to be a long, long year. Look at it from the line chart perspective. And let me put certain things into context. Here you have SR resistance, support become resistance, and breakout structure monthly time frame. And we have here as after breakout structure RT slash RS, where resistance has become support 1, resistance becomes support 2, resistance becomes support 3, and resistance becomes support 4. Take away the line chart, appreciate it 4, 5 on that ascending trend line. So technically, market could continue to move in that direction, and that's a technical sell roof. So if price decides to seek sell on that roof, it is what it is. It could come back again. So a pushback into that zone, that's oil about 104, or you're tapping into 104. Very much possible, very much. Or in the worst case scenario, what we could have is a situation like this where oil tests the previous highs. So oil might move to test the 2011 high on monthly TF. That is RT, ROS1, RT, ROS2. So oil could move in to test that zone again. That's a technical retest roof on a monthly time frame. And I will show you something which if you look very well to, you will see it. So oil could come there. We see we have here a support structure 1, support structure 2 on monthly time frame, and a break of structure after that price came back and retested. So it is an important price action zone. 2 support structure, breakout, retest 1, retest 2, technically putting there as a retest zone. In trading, never say never. There is nothing that is impossible. Nothing is technically impossible. Nothing is technically impossible. So you could get a pullback there. But at the moment, what market has done from the line chart perspective, which you can see here, market has breached a key resistance structure. Oil is in a free continuous buy. So the market makers for oil are going to set up whatever scenario to set oil buying in check. Oil long is in check. See, so let's put that structure into context again. On a monthly time frame, that's an SR, support become resistance from the line chart close 1, and we have it again, line chart close 2, breakout of structure. Look at the breakout of structure followed by a retest from the line charts, SR1, SR2, take it out, breakout of structure followed by a retest, breakout of resistance structure, came here, formed a demand, bought, breakout of structure, came back again, and respected it as a broken demand floor as a new resistance structure. So now we have a breakout structure. So you want price to return back into a broken structure and you now go long. So if you're not long or in oil, just give it time. Allow it to play into your zone. If it plays into your zone, you know what to do. You know what to do. So if it comes into your zone, then you take that shot from there. You take it from there. So what I see technically, it's the neckline of the W structure. This is the neckline of the W structure. Already there was a clear breakout and from a descending trend line pattern, but price could still dip back. Price could dip back into here for a technical retest from, if you're viewing it from a horizontal perspective, it could dip back into that zone to retest. So if it does so, you hold your long and look at it. There is a clear breakout from here, from the line chart perspective. In fact, it started from here. If you're using the line chart close perspective, that's what you're using. If that's you, then you should know that this is the right time when price break out from here. This is when you should have gone long. This is when you should have gone long. So if this is you, now if you are that person, these are the impetus that should have kept you guided. You have here as resistance structure 1. You have here as a second resistance structure 2. And we have a couple of rejections, but we were looking at the monthly candle close, which is a key factor that gave back to that descending trend line, DTL. It's an advanced trading strategy, you know. So descending trend strategy on a monthly time frame, RTRS1, RTRS2, RTRS3 breakout of structure, and you can see that market retested here. You have a clean break and retest at this level. Look here, you look here very well. You see that you have a clean break and retest at that level. You have a bar at that level. There's a clean bar on a monthly time frame. So that was opportunity to take on that baby if you're an oil guy. So market already gave you a clue on say, oh, here you have a bar from here. Look at the structure. The market broke out from that structure in the month of January and it came back retested in February and have left. So it entered a critical zone. So let me share the demand floor to put into perspective and also remind you that oil price will continue and brace up wherever you come from. Wherever you come from, the price of oil will rise. So it doesn't matter. It's the structure of the market. It's the current geopolitical tension and it's business. So oil rising is business. I want you to see it that way. So this is someone's business. This is time to make some money. So you could see it, or you could continue to move into 106, 108 before we see an evident retracement back into the ascending trend line, which I think the trend angle is the same. I cloned that structure, returning here. So if oil pulls back, this could be the next demand floor. Shavyfxhub will never call you or text you for account management or soliciting for trading capital. All our trades are free and for educational purpose only. And as you start the day strong. Bye for now.